So you've seen those financial charts, right? A bunch of red and green bars that just look like a mess? Well, what if I told you that's not just noise? It's actually a language that tells this incredible story of conflict, of victory, and defeat playing out in the market every single second. And today, we're going to learn the alphabet of that language, candlestick patterns.
So, here's the game plan for today. First, we'll talk about this whole idea of the market's secret language. Then, we'll get right into the nuts and bolts, the anatomy of a single candlestick. After that, we'll dive into the playbooks for both the bulls and the bears. And we're going to wrap it all up with a really crucial piece of wisdom about what these patterns really mean.
All right, let's kick things off. Section 1. This idea of the market having its own secret language.
Every single chart out there is telling a story. It's this minute-by-minute, day-by-day narrative of the constant tug-of-war between buyers and sellers. And once you learn how to read it, you're not just looking at lines on a screen anymore. You're actually interpreting a live, dynamic event.
Okay, so to read that story, you gotta know the basic words, right? So let's dive into Section 2 and break down the anatomy of a single candlestick. So, every single one of these little candles, and it doesn't matter if it represents a day, an hour, or even just a minute, it gives you 4 key pieces of intel. The price where things opened, the absolute highest point it reached, the lowest it touched, and, of course, where it finally closed. Think of it like a complete snapshot of that period's battle. Now, here's where it gets really simple and kind of cool. If the candle is green, or sometimes you'll see it as white, it's bullish. That means the buyers won. They pushed the price up and it closed higher than where it opened. On the flip side, if it's red or black, it's bearish. The sellers took control and they forced the price to close lower than it opened. Buyers won or sellers won. It's really that straightforward.
And that brings us to the 2 main players on the field. You've got the bulls, who are always trying to push prices up, and the bears, who are trying to drag them down. And what we're about to get into are their signature playbooks, the key patterns they use to signal their next big move.
Okay, first up, let's crack open the bullish playbook. These are the patterns that give you a heads up that the buyers might be starting to gain the upper hand.
And our first pattern is one of the most classic reversal signals out there. It's called the hammer. And yeah, you're about to see why it gets that name. This story behind the hammer is it's perfect. So imagine the price is in a downtrend. The sellers are in control, and they push the price way, way down. That creates that long lower tail, or wick. But then, just when it looks like it's over, the buyers storm in with incredible force. They push the price all the way back up to close near where it opened. It's basically a signal that the sellers are totally gassed, and a big reversal could be just around the corner.
All right, next up, we've got a really powerful 2-candle pattern that shows a very clear shift in momentum. This one is called the bullish engulfing pattern.
Okay, so this pattern brilliantly shows a complete change in who's in charge. You have a small down day, right? A little red candle showing the sellers have some control. But then the very next day, boom, a huge green candle opens lower, but then rallies to close way higher, completely engulfing the previous day's entire range. It's like a massive statement from the buyers saying, we are in absolute control now.
And for our final bullish pattern, we have one that shows a really confident, almost marching advance. It's called the 3 white soldiers.
Yeah, so this isn't a sudden, sharp reversal. This is a steady, powerful takeover. What you see are 3 long, strong green candles in a row, each one opening within the body of the previous one and closing higher. It's literally the visual equivalent of an army confidently marching up the chart. It's a really strong signal that a new uptrend has begun.
All right, so we've seen how the bulls make their moves. Now, let's flip the script and dive into the bearish playbook. These are the signs that the sellers are gearing up to take over.
And first up for the bears is basically the mirror image of the hammer. Meet the shooting star.
So this is the exact opposite story of the hammer. The market's in an uptrend, things are looking good. The buyers try to push the price even higher, and that's what creates that long upper wick. But then, the sellers just slam it right back down, forcing a close near the open. It's like a shooting star falling from the sky, a pretty clear signal that the rally might be running out of steam.
And hey, just like the bulls, the bears have their own engulfing pattern to show a major shift in power.
And you can see the narrative just as clearly here. You get a small up day, a little green candle. Maybe the bulls are feeling confident. But the next day, the sellers respond with overwhelming force. They create this massive red candle that completely dwarfs the previous day's action. It's a huge warning sign that the trend is likely about to reverse and head down.
Okay, our final bearish pattern is the ominous counterpart to the 3 white soldiers. This one is called the 3 black crows. This pattern is just a raw show of force from the sellers. You've got 3 long consecutive red candles just marching steadily downwards. This suggests the sellers aren't just in control, they're confident, and they're pushing that price down with real conviction. It's a pretty strong signal that a new downtrend is probably getting started.
Okay, we've covered a lot of ground, a lot of different patterns. But before we wrap this up, there is one absolutely crucial rule you have to remember. And that brings us to our final and, honestly, most important section. Patterns, not predictions.
Seriously, this quote is everything. These patterns are about understanding possibilities, about reading market psychology. They show you where the balance of power might be shifting, but they are not, I repeat, not a crystal ball that tells you the future. They're tools for analysis, for managing risk, and that's it.
So we've basically learned the alphabet and a few keywords of the market's language. The next step? Well, that's for you to start observing, to start seeing them out there in the wild. The charts are telling their stories every single day. So the only question left is, what stories will you discover?